Deepak Parekh of HDFC joined us just a short while back. Let's listen into that conversation that we did have with him. The elephant in the room was NPAs, and we may say whatever, but the bankers were not taking decisions because these are discretionary decisions and they can be hauled up for this, they can be haunted for this many years after they've hung up their boots in services, and which is why, perhaps giving them a legislative legitimacy, changing the Anti-Corruption Act and all of that will come in time. But the fact is that this is an ordinance, this will get the approval from Parliament. So what do you make of the ordinance and the details that we know right now? Your first take.
Well, my view is it's a step in the right direction. Tackling NPAs has become paramount importance to the Indian economy, leave alone the banking sector. It is a major issue when international rating agencies look at India's rating. So we have to tackle the issue of NPAs head on. This will strengthen the Reserve Bank's arm. This will allow Reserve Bank to appoint committees, appoint other authorities, get them involved to support the banks when they want to take a haircut or when they want to write off a loan. The other opportunity this will have is that, as you know, that we have passed the new Insolvency Act. So on the Insolvency Act also, the government can ask RBI to let a company go into insolvency and distribute the residual assets after disposing them off. So I think it is much simpler. It is clear directions are now available to the companies, to the Reserve Bank, to the defaulting companies. So therefore I feel it's a move in the right direction.
All right, a move in the right direction, and this comes bundled in with the Insolvency and the Bankruptcy Act. But in terms of the way forward, sir, what needs to be done to execute and implement this, to perhaps milk this best? The intent and the policy perhaps is in place, but what, according to you, needs to be done in terms of execution by banks and regulators at this stage?
I think what has to be done now is really the bank boards, individual bank board will have to take this on seriously, and the management will have to take a call rather than evergreening loans for quarter after quarter. Take a hit once and for all, and the RBI will support it, the government will support it, and move on, because we have to clear this malaise from our system.
All right. I take your point about clearing the malaise from the system, sir, but Mr. Parekh, do you believe this perhaps, given the circumstances, is the best alternative to a bad bank? I mean, I know different sections of the government have had a view on the bad bank. So Arvind Subramanian on one hand believes they should be a bad bank. Arvind Panagaria on the other hand believes it should be the private ARCs given the way forward. But do you believe this was the best alternative to what many considered to be the solution, which was a bad bank? Clearly, because the focus is going to be on the top 35-40 distressed accounts, and if RBI is going to give specific directions and tell the banks to do what they may, we may differ on whether it should or should not, but if it is authorized to, then I'm sure they're not going to look at a whole host of assets and accounts. They will perhaps just look at 35-40 distressed accounts at this stage.
See, the bad bank, the issue was the government, rightly so, did not want to underwrite private sector losses. By a bad bank, government would have to fund the bad bank, government would have to give some government securities to it, and they certainly did not want to bail out the private sector. And therefore the government, as I said rightly, they were against the bad bank policy.
All right. But how would you assess the near-term impact on banks and corporates especially? Because RBI is now authorized to go after bad assets, and they can, it's yet another discretionary layer that's added, and I agree with Maithili there. But the fact that RBI can give out specific directions to banks to go after those bad assets, what is the immediate impact that you assess will be on some of the large lenders who are sitting on big defaults, and of course corporates who are the makers of that default in many ways?
Well, the impact on individual banks may differ. Many of them have very low capital adequacy ratios. They may need more capital. Again, the Reserve Bank and the government have come out with these perpetual bonds. Many banks have issued perpetual bonds. So they will have to shore up their capital, both tier 1 and tier 2. If they cannot do tier 1, they'll have to, at least they can do tier 2 to increase the capital adequacy ratio to take care of the losses.
So I know you're in a rush, but I'm going to take one last question with you before I let you go. It's not very easy to catch you on a day like today, and it's indeed a pleasure on ET Now to have you, Mr. Parekh. Let's look at the big picture, the long-term impact on the Indian economy, because there are experts out there who believe resolving the NPMS in India amounts to or tantamounts to perhaps correcting the course of Indian economy. I mean, what do you believe is going to be the long-term impact of this on the Indian economy? I mean, lots of ratings agencies and investors have seen the banking system as a huge overhang on things. How and do you believe with all of that set to change?
It is an overhang, it is a problem, and it is an issue raised by international agencies like the World Bank. It is a problem raised by the rating agency. This is hampering our upgrade, and so this will certainly go a long way in improving India's rating internationally. But execution is important, and the Reserve Bank now has all the powers to push banks to take hard decisions.